Good morning. I hope you're doing well, and welcome to another edition of the London Session Open. I can see that Damien and Nick are already here. Good morning, guys, and good afternoon, Damien. And happy Friday to everyone. Uh, Good. I hope you're doing well. I hope you have some nice plans for the weekend. But first, let's take a look at the markets. So Euro it's starting to move down. We're starting to see a little bit of a change in sort of situation in the market. We now yesterday had a decline here on the daily that was closed at the lows. Like the prior days, we just had declines, but the market quickly bounced. So we moved down, and it looks to me now that we have some sort of a high here in the euro, and that maybe this market could move to the downside. We've seen as well quite aggressive sell-offs in other markets. To give you an idea, the New Zealand dollar dropped so much that it actually got us out. So if we would have bought here, unfortunately, it would have been stopped out. So this trend is now over. It would have been a loss of about 73, 70 pip, depending on your entry. It's not too much to do. And then you have, the pound as well. There was a statement, not a statement, but an interview by Mark Carney yesterday on the BBC, and there was some dovish comments, sort of suggesting that they don't necessarily have to increase interest rates, but they will increase interest rates. It's just an article from Reuters. Um, he was pointing out that there are other meetings this year. And then he says here, I don't want to get too focused on the precise timing. It's more about the general path. He said that the UK should prepare for a few interest rates over the next few years. This is the dovish comments. A few years, what does this mean? Like once a year, next 5 years? Well, that's very different to say 4 or 5 in 2 years, right? So it's just as that we have some mixed data. We'll sit down calmly and look at it in the round, talking about the next meeting. Uh, so yeah, so he sort of put pour cold water on bulls. But the issue with Mark Carney is that he speaks a little bit about himself-ish, and well, not he speaks about his view, but it doesn't have to be that his view relies necessarily with what everybody else thinks. And I remember a few years back, he sort of, if I remember correctly, he up here in 2014, he was like telling us, "Oh yeah, get ready for a rate hike," and then at the end, they sort of changed their mind and nothing really happened. But then I think around the lows down here as well, he did something. I don't remember exactly what he did, but he was, I think, dovish again. So it's a tricky situation, but obviously the market now is getting squeezed out, or the pounds are getting squeezed out. And technically, we're still above support here. We haven't had a single sort of bullish candle uh, in this market yet, so you're probably better off waiting for that. If you haven't traded yet, you're probably better off waiting for that unless want to take on a very speculative long. I mean, it doesn't have to fail, but a speculative long where you look to risk under 13 pip, and then if it actually goes up, you can make 300 or so. But there's a heightened risk here that gets stopped out. But technically, sort of, it looks fine still. Uh, you have same situation with the euro pound, where the market is really really close, so just stopping out. And the way this looks, I don't necessarily think it's gonna push substantially higher. But obviously, if it takes out this high, then it could be a situation where this market continues to um, just move a little bit higher, and we'll see. Maybe if it, I don't think it's going to go up to 89.50, but definitely up a bit in the euro pound. So again, you need to be careful. And I was actually thinking, because we know that the bullish was really, I mean, it was a strong trend in the pound. I was thinking that this could be something. This is the pound versus the CAD. So we know that the dollar CAD already started to move lower. We actually traded that. And then you had the euro CAD as well. We were stopped out. Now the pound hold up very well. And because everybody's been so bullish, but now suddenly it's been like a 360-degree change here. Not 360, but 180. Uh, where again, markets, lower inflation, worse off retail sales, and now even the Bank of England is telling us not to get too excited. So I have a feeling that this market could actually, the pound in general, could soften a bit. Again, euro pound taking out a stop, maybe pound dollar reversing. And I'm not too interested in, I'm looking at it. I'm not actually sure if it's the best thing to sell right now here on a break, but obviously if we take out this level, we can go down maybe 238, maybe up to 450 pip for a risk of about 250. So it's not, it's an okay risk reward ratio. So this is something to bear in mind, if you, especially if you want to bet on weaker pound. And now I'm starting to lean towards that just because that sort of major change in a lot of people were enthusiastic, and the pound is rallied for quite a bit and obviously needs to pull back eventually, a little bit at least. Now here's the US dollar versus the Japanese yen, and the market finally, back up above the breakout level. And if you bought on dip, also good. Not up by much, but it's up. And there's no real reason here, sort of, to change the bias. You just want to stick to being bullish above the low here, which is 106.58. Here's the Aussie dollar versus the USD. It was never really sort of my main thing I wanted to trade, but we did have that corrective move. And if this is sort of a long-term low, then the market should bottom out from pretty much where we are right now. Um, so let's see how that plays out. In the case of the New Zealand dollar, we're stopped out. We had some soft inflation figures, and then I'm not really sure exactly what happened here. Actually, I know what happened here. The market moved lower, but I'm not sure exactly what caused this to sort of trip the stops, but it did trip the stops. And I think if you look at it from a bigger perspective, not much has actually happened. It's not that the dollar is going to start to gain, but take out the trend defining level, and the market could slip to the March 20th low, falling a correction. So maybe it'll go up. Uh, maybe it'll go up and then probably down. But I'm neutral here in this here, and I'm not really sort of interested to do anything here, just because it didn't react the way I wanted to react. Here's the dollar CAD. It's moving to the upside. This could be interesting. 27 level. I think it's around these levels traders want to sell. Obviously, we'll pay attention. If the pound breaks, Aussie dollar breaks, New Zealand dollar breaks, which already did actually, then you need to be careful. But right now, I don't actually foresee that. Here's crude oil. Just waiting for that pullback. It's probably going to go down, and in worst case, it sort of comes down even stronger. So watch this, see what happens. Wouldn't necessarily buy the first touch. Maybe it'll go a little bit deeper. Look for some sort of bounce here, I would say. Trend is bullish above this low here, which is 65.15. Here is gold, and much like the euro, it's just move back down into the middle. So there's not too much to do here. Here's the S&P. So this is a bit of a change. It went down, up, and I think this is going to continue to go down. And we're going to pull some Fibonacci's from the whole move. And I'm actually going to make some adjustments here. I'm going to look for at least the first fib, and then maybe from levels down here, I will look to potentially rebuild a position. I would argue that it's going to go down and then probably up again. We're dealing with some sort of a downturn, as you know. And I'll take this out, and I think we should be fine. But for now, for the move to the downside. Here's the German DAX holding up very well. I think the weakness in the euro is sort of causing this to hold up well. I think though now, just looking at the S&P, most likely will trade to the downside. So um, I think this will drift lower. Okay, so sort of, I think something to definitely keep an eye on today. I think it is the pound CAD. Keep an eye. Obviously, it is at the level now. The only issue here is the decline without any sort of correction is the beginning of the day. Um, it could be that it's just going to trade lower, but I have a feeling that this could, if it goes up and then the second time we take it out, I think that could be interesting because it does look to me that, maybe we'll have a nice reversal here in place. We'll have a bit of correction of this big rally that has been in place in September. Sure does look like it. Looks like a sort of A, B, and then, sort of C move down. So that's something to watch. We were looking at the pound Aussie as well a few days ago. And here's the pound Aussie, and sort of looks very similar. It is possible to buy here, but take out the lows and we could potentially move down lower. And I think that's pretty much it. Let me see here. Do you guys have any questions? Let me know. Meantime, I'm just gonna save this. So in general, by the way, as well, I'm just say I don't know if you saw yesterday's London session close video, but I'm primarily just holding cryptocurrencies right now. Well, I am actually just holding cryptocurrencies right now. After the close of those S&P 500 and sorry, not the S&P, the Dow and the Nasdaq positions and the dollar CAD, I'm just holding cryptos. Sort of looking for the next move. Here we go. So good to see you guys already here in the morning. So you had 3 months without rain. Wow. I think here we can't go out without 3 days without rain. Someone was complaining and saying that the UK GDP and retail sales was a little bit softer than expected. And then somebody replied back and said, but hey, the weather is always bad in London. How can, that not be taken into account? The weather is not that bad in London, to be honest, or in England. It's it just rains a little bit most of the time. That's just it. But yesterday was very, very. It was proper summer day. It was sun outside. It's bright right now in the room here. A few months ago, it was pitch black. Okay, so if you wonder what I'm doing, I'm just uploading the charts here in the background. And if you have any questions, just let me know. Nah, all good. Okay. All right, good. So we don't have any questions. So we have a little bit to work with. I think again, sort of it's a bit, let me explain really a little bit what it's all about, right? So you might remember like in the dollar CAD was moving up and up and up and up. And obviously I was really bullish because the trend was bullish. And then I did try to buy Euro CAD, as you might remember, and I got stopped out of that one because it looked at one point actually, I remember it was going up and I thought, all right, this is actually gonna go down. I think we went short here, I think. And then the market moved up instead, and then we went down. And then when we finally took out that low, um, we moved to the downside and we got a little bit of a move. And it's a little bit the same with uh, sort of the pound, where it had a bit of a shock. It is a shock to the system, sorry, for bullish traders. So here is the euro, up, down, up, and then we bought here and it moved to our advantage, but then it plummeted, and then we took out the support level. The market moved down a little bit, and it could be something very similar here in the again the euro pound and particularly the pound CAD, where I think this market is going to try to just get people out, and then it will see if it wants to continue to trade higher, which I think it might go a little bit. But in the pound CAD, what makes this interesting is the fact that there's not too much support until we move to the high, but the actual low is down here, which makes this an interesting market. Okay, guys, have a great day and a great weekend, and I'll see you guys Monday. Thank you.